All right, so this is one of those trades that does not look exciting on the surface, but if you've been doing this for a while, you know that these are actually the best setups because nothing happened for a while. I mean, you can see here that as the price was getting into the zone, this was in December, so we waited for January, February, March, and we just entered this trade 2 days ago. And this is a short video that I recorded for this YouTube channel where you can see exactly where my entry was. And that's what I mean here, because when nothing happens, all you really need to do is you just need to wait patiently. What I did in this case, I watched it move, I watched it pull back into this zone. It was going sideways for 1, 2, almost 3 months, and I didn't do anything. And that is actually the hardest part, because it's not placing the trade itself, it's the fact that you don't want to place it too early. So let me walk you through exactly what I was thinking about this one. I always start on the monthly time frame. I make sure that there are either higher highs or higher lows being created. Or the easiest way I do it is I have 3 different EMAs, 10, 100, and 200, and I just want to make sure that they're on top of each other. And this is very important because I'm not trying to predict anything. I'm just trying to align myself with what is already happening. Now, once this is established, I don't jump in right away. That what I just discussed is the first filter. The second filter is basically a retracement. While I want to see an uptrend, and while that is very exciting, it's exciting when you see a Netflix stock somewhere over here at the edge, right? And everybody wants to jump in because it is really just like for 3 consecutive months it's going higher and higher, and you don't want to be late to the game. You just want to jump in. But that's not the approach that I follow. What I do is I expect a retracement, some sort of pullback. And that's exactly what happened here. So Netflix came at a discount price, and it came into this demand zone here. That demand zone is defined by this last bearish candle before we had a very good bullish move. 3 very strong consecutive bullish candles being generated. This is like picture perfect demand zone. So price actually did come down slowly, somewhat. It wasn't too aggressive, but enough that it felt uncomfortable for a lot of traders. This is where I personally get excited because I'm looking at it differently. I'm looking at that, now I can get Netflix at a discount price. And this is an opportunity to get it. Now, sure, Netflix could have continued to go down, but in this specific case, I waited for a confirmation. So that confirmation happens when I go down a time frame and I go into the daily time frame in that case. And you can see here, again, this is December. This is still going down, penetrating this demand zone here. But if you look at on the monthly time frame, the candle never really closed below the demand zone. So therefore, I would not have exited. It was just a wick that happened on the monthly time frame, which meant that we're still involved in it. And then the price came back up. There was a strong rally. It came up to the 3 EMAs, and this is where I started looking at it. But you see, even here, I did not enter blindly. This was not a clear confirmation setup. What I generally wait for is some sort of consolidation and then a breakout outside of that consolidation. So I could have entered here, right? But that was March 5th and nothing really happened. Actually, I would have been in the negative for a month. So what I ended up doing is I waited for another consolidation to happen. There was perhaps something over here, and then I saw that, so you can count this as a consolidation. There was a breakout of that consolidation, but the price never closed above the 3 EMA. So not only do I want a bullish candle to close above the consolidation, but I wanted to close above the 3 different EMAs. So when that did not happen, then I waited. There was another consolidation that was formed over here. 1, 2, 3, 4 different candles. And there was a bullish candle that closed above this consolidation last Friday. Even at that point, I did not enter. What I wanted to do is I wanted to wait for my confirmation entry, which I call the double push. That one is defined by having another bullish candle that closes above the one that broke out of that consolidation. So in that case, this was even a tiny bit. This candle on Monday, so 2 days ago, April 13th, is where it broke out. At that point, I was at work. I work a full-time job. I saw the market at 5 p.m. I saw that it had closed above it, and then being very relaxed about it, following my strategy step by step, I decided to enter. And you can already see that after Tuesday and Thursday, I'm basically at I believe a 2.5 to 1 risk to reward. Now, my target here that I have set is 6 RR, so 6 rewards to 1 risk. But you can see already in 2 days, I'm in profit. So in these situations, you can do whatever you're pleased. You can remove your profits fully. You can just close this position and look for other opportunities. You can allow it to continue to run and perhaps reach this target 6 to 1, or you can let it run up to the previous highs, and that's already a 17.1 risk to reward. So there is no wrong answer. It is really up to you and how do you want to manage this specific trade. So ultimately, for me, it isn't about predicting the market. It isn't about me predicting what's going to happen during earnings, which is supposed to be this coming Thursday. And perhaps there is a volatility related to earnings. Most often than not, it is because of that. And who knows, on Thursday, which is tomorrow, we may see very good news on earnings, and the price may gap much higher than that. It may even drop below, even if the earning call goes well. But I do not depend on earnings. I depend on this specific strategy. I allow the price action to tell me what to do. And I do my best to remain disciplined and patient. And this has been the biggest shift for me. And it's not about finding a hidden strategy. It's just about doing less, but doing it at the right time, waiting, even when it feels boring. And it's trusting the process even when nothing is happening. As I pointed out, this is already like a 3-month event here that nothing was really happening. And then all of a sudden, within 2 days, you get a 2 to 1 risk to reward. And who knows? We'll see how the earnings call go tomorrow. This may already fulfill this risk to reward level in just 3-4 day period. So again, at the end of the day, this trade didn't come from being smarter. It came from being patient. And honestly, that's something I'm continuing to work on. But it is trades like this that reinforce this discipline and this patience. So we'll see what's going to happen from here. Maybe it'll keep running. Maybe it'll pull back. Maybe I'll get stopped out later. But the important part already happened, and that is that the process played out and that I followed it. And that's really it. That is the trade. That's what I wanted to cover today. Hope you enjoyed the video. If you have any questions, please feel free to leave them in the comments. And if you like the content, feel free to like the video and subscribe to the channel. All the best, everybody. Until next time. Bye-bye.